Okay. Good evening, class. Last time we stopped on the removal of the auditor, and this class we are going to look at rights and responsibility of an auditor. So we start with the duty of auditor. The statutory duty of auditors as follows: A. To make a report to the members of the company on accounts and financial statements laid before the members in annual general meeting. B. To state whether the financial statements of the company or group of company open the brackets shows a true or fair view and have been properly prepared in accordance with the provisions of the code. C. To consider if any information in the director's reports consistent with the accounts and the reports of the fact, if there are any of such instance. D. To form an opinion as to whether proper accounting records have been kept by the company, or the company prepare returns adequate for their audit have been received from the branches not visited by them. That is, if any branch that was not visited by the auditor, they want to be sure that the report from those branches are in accordance with that which they are visited using. Because there is no way any auditors can cover everywhere. If a company that have branches like in Lagos, have a branch in Ibadan, have a branch in Akure, have a branch in Kaduna, have a branch in Port Harcourt, there is no way most times will cover. But at times in those branches, it can use head office and maybe 2 or 3 branches to determine what will happen in other branches, but they must be in accordance with what they've done. It is the company balance sheet and its profit and loss accounts are in agreement with the accounting records and returns, and such information and explanation as like he thinks necessary for the company's officers. You can open the brackets. These matters are reported on by exception only, that where the auditors is not satisfied, no mention is made in the reports. E. To outline in his reports details of directors' remuneration, loans to officers, transactions involving directors and other connected persons. You open the brackets, and if not disclosed in the financial statements themselves. F. To make other special reports in various circumstances. And finally, to make a statement of circumstances where he ceased to hold the office for any reasons. That is the duty of auditor. Then what are the rights? The rights of auditors. Statutory rights of auditors as follows. 1. Right of access at all times to books of accounts and vouchers of the company. 2. Rights to acquire from the officers, including the directors of the company, such information and explanation as are deemed necessary for the performance of auditors' duties. 3. The right to attend any general meeting of the company and to receive notice of another communication relating to any general meeting on any part of the business of the meeting which concerned him as auditor. 4. The right to apply the court for direction in relation to any matter arising in connection with the performance of the auditor's function under the code, and to have the cause of any such application met by the company unless directed by the court. 5. The right to notify in writing in the event of any unintended resolutions to remove them or remove auditors or appoint some other persons in their place instead. To submit a written statement which must be circulated to the members and be read if so required at the general meeting. 6. The right before accepting appointment as auditors of the company to their due statutory duties to the members. Sorry, the right before accepting appointment as auditor of the company to communicate with a retiring auditor, if any. That is, before any auditor can accept any appointment, he has the right to write to the previous auditor asking him why are they changing him. Peradventure, he has earned his terms or they are stopping him before the time, and if there are any pending issues that he needs to know, at that point the auditor can oblige him such information. Finally, the right to contract with a company in addition to the statutory duties to the members of the company, expressly or by implication, to undertake the obligations to the company in relation to the dictation of the defalcation and advice on accounting, taxation, raising of finance, and other matters. Now, professional requirements as to competence and integrity. We want to know what actually the auditor makes him qualified to do what is to do. Practice of principle of due skill, care, and competence. 1. Auditors should carry out their professional work with the skill, care, diligence, and experience that with proper regard for the technical and professional standard expected of them. B. All auditors in public practice are obliged to provide quality service to their clients. Any auditor, like I've explained to you in a class before, that is not all accountant that can practice as an auditor. When you qualify as a chartered accountant, before you can obtain the license to practice, you might have worked with audit firm for about 24 months. Or if you qualify while working in audit firm, automatically you'll be issued a license, because somebody is going to pen his signature to say, yes, you are not going to disgrace the institute. 3. The degree of skill and care depends on the work. A higher degree of skills is required for work of a specialist nature, e.g., due diligence investigation, or where negligence is likely to cause substantial loss. Like I said before, that the nature of the job will determine if anyone gets a job to a company and there are issues that go beyond accounting profession, the auditors will be able to need to engage. Probably if you have to do with real estate, you need to engage a valuer who could be able to value the property and give him accurate results. Or there are litigations and he needs to engage a lawyer. If it's off script, right? If it's oil business, you need to get people who are technically inclined so that he will be able to advise the company properly. 4. The duty of skill, art, and care is not absolute. Opinions and advice do not given rise to claim just because they can be substantially proven wrong. 6. Auditors must employ reasonable care in whatever they do. They are practically expected to apply general acceptable accounting or auditing techniques when performing their tasks as auditors. Finally, if auditor comes across any matter which puts them upon inquiry, they have a duty to investigate such a matter to reasonable and satisfactory conclusion. Auditors should not accept any explanation unless they have been carried out such investigation as well enable them to draw their own conclusion and from their own judgment. What does this point mean? When auditor places one inquiry, while you are checking the records and you discover as an auditor that there is something hiding, in this person, or probably officer comes before you and you are trying to ask questions and he's jittery, he's not confident in telling, which means there is something go wrong, which means you can place such a staff on inquiry to be able to know that you now go further and go deeper to investigate more about such a staff.